In this video, I'm going to give you the exact framework on how to execute within the markets, within the live markets, from an algorithmic trading perspective. Okay, so this video here might change your whole perspective on how the markets work. Okay, and really, these concepts that I'm going to teach here are extremely important. Okay, so as you guys know, 90% of traders lose money when executing within the live markets, and they are simply trading retail perspectives like support and resistance and breakouts, etc. Okay, so these are essentially flawed strategies that institutions and algorithms use sort of against retail in order to use them as liquidity to provide fuel in order to actually move the markets. So without any further ado, let's just jump straight in here and break this down step by step. So this is the euro dollar market on the 3-minute time frame. Okay, one thing to note, this is an intraday perspective. Okay, this is an intraday time frame on the 3 minutes. Okay, so this can sort of take place on the 3 minute, the 2 minute, the 1 minute. However, these time frames are what the algorithms are pricing off of. Okay, so understand that they're not using the hourlies and the dailies, etc. It's these shorter term algorithmic time frames that are really repricing and moving the markets. Okay, so let's just jump straight in, and what you can see here is we are around the New York Stock Exchange open. Okay, so it's around 8 a.m. New York time, all right, in the morning. And what you can see here is we have a range high up here. Okay, this is indicated by this dollar sign. This indicates that there's buy stops resting above this major swing high here. Okay, what you can see is we have a repricing above the range high. Okay, so price pushes above the range high, and then what we have is a deviation, and then we push strongly back to the downside. Okay, so understand what's happening here from an algorithmic perspective. Price is basically pushing up above this range high, filling the buy stops. Okay, so any retail that have buy stops, they're going to be triggered. They're going to be resting above this range high here. So then buy stops are triggered, and then what you can see is we get an instant repricing to the downside. Price pushes to the downside and creates a fair value gap. Okay, so this is the fair value gap here. Right here, this is the fair value gap, i.e. what we have is a displacement in price. Okay, so price pushes strongly to the downside, displacing, creating an imbalance, okay, which is basically when price moves too fast in one direction, it leaves an imbalance in price. Okay, and what you find is once these imbalances are created, price, not always, but price very often likes to reprice and rebalance the fair value gap. Okay, so this is essentially the fair value, this fair value gap here. Once you can see the displacement, we get a retrace into that area. Okay, and we rebalance the order books. Okay, so we went from being sort of price moving too quickly, we then reprice and rebalance, and then what you can see is we start getting a push to the downside. Okay, so we're looking for shorts on the market. The reason why is because we see this deviation here, we see the run on liquidity, i.e. the buy stops here, then we get an instant sort of displacement to the downside, leaving a fair value gap. Okay, so this indicates that the bulls, so the longs, are essentially depleted, and that we have strong bearish momentum that has just stepped into the market. Therefore, it seems quite scary, but we can look for an entry off our fair value gap. Okay, we can look for an entry off this fair value gap and look to rebalance off this area. So that's exactly where the orders are placed from the institutional and from the algorithmic perspective. They are placed around the fair value gaps, around rebalancing the fair value gap. Okay, so the order goes in here. We've got clear invalidation resting above this swing high. So we have invalidation here. in terms of targets, we've got a double bottom area here. So this is your first target. So you short here, first target, this double bottom area here. Okay, so understand that there's, liquidity resting below here. So price could actually deviate below, reclaim, and then actually start pushing back to the upside. So this is a logical area to start scaling out some, not all of your position, some of your position, okay? So we're short here. Let's just mark this on as a risk to reward tool. So we're short here. Invalidation goes above the swing high here. Targets, you've got a first target, which is this first area as a point of liquidity. And then ultimately, you're going to be running this down to range lows at around a 1 to 3.8 risk to reward. Okay, so understand, the algorithms are going to be taking profits at certainly equal lows, okay, because this is an area of liquidity. And then, if we can break that, we're going to be running down to the low of the session, okay, the low of the New York session. So that's a very, very sort of safe target as well, down at the lows there. Okay, so it's really important to understand that this sort of thesis is framed off of the run on liquidity, so i.e. the run of buy stops. Okay, once we see that, we're looking for a displacement, then a repricing and a rebalancing of this displacement from the fair value gap that was created. We have clear invalidation, and then we have clear targets, liquidity and time-based targets, okay, mapped out. Okay, so first targets come off here, and then second targets down at the range low. Okay, please understand that this is during the New York Stock Exchange session, okay, the NYSE. So you've got the open, we're trading during the high volume session. Okay, it's extremely important to understand, because this is when essentially the volume is within the market, and that's ultimately where the algorithms are going to be trading. Okay, it's during the high volume times. Okay, so these are, it may take some getting used to, because ultimately you may not view the market from this sort of institutional and smart money perspective. However, with some hard work, you can really sort of shift your mindset on how you see the markets. Okay, and that's it for this one. Okay, I just wanted to break down this entry schematic based on our algorithmic trading strategy. Okay, so that's it for this one, and I'll see you shortly. Take care, guys. Bye bye.